General contractors aren't banks. Here's a question nobody seems willing to ask. Why should a general contractor finance your insurance claim? I was a general contractor for more than 20 years. I also worked as a property insurance adjuster. I've lived on both sides of this equation. In a normal construction project, everything makes sense. A homeowner decides they want to remodel a kitchen, renovate a bathroom, replace a roof, or build an addition. They plan the project. They establish a budget. They choose a contractor. The contractor requires a deposit. Work begins. Progress payments are made as milestones are completed. Final payment is made when the project is finished. Everyone understands the rules before the first hammer swings. Now compare that to an insurance claim. The homeowner didn't choose to have a tree crash through the roof. They didn't budget for a hurricane. Yet somehow, the contractor is expected to become the bank. The contractor buys materials. The contractor pays employees every Friday. The contractor pays subcontractors. The contractor pays suppliers. The contractor pays insurance, fuel, payroll taxes, equipment costs, rent, and overhead. Meanwhile, the insurance company may take 90 days, or 120 days, or 6 months, sometimes longer. During that entire time, the contractor is expected to carry the financial burden without interest, without compensation, and without any guarantee that every dollar will ultimately be approved. Think about that for a moment. If you walked into your local bank and asked for a 6-month interest-free construction loan with no collateral and uncertain repayment, they'd laugh you out of the building. Yet that's exactly what many contractors are expected to provide every day. Then comes another problem. Insurance companies often criticize contractor estimates as being too high. But has anyone stopped to ask why? Maybe it's because the contractor expects negotiations. Maybe it's because supplements are almost inevitable. Or maybe it's because carrying hundreds of thousands of dollars in payroll, materials, and overhead for months has a very real cost. Money isn't free. Capital has a price. Risk has a price. Cash flow has a price. If the system expects contractors to finance claims, then financing costs become part of doing business. The irony is almost painful. Insurance policies exist to restore people financially after a loss. Instead, the financial burden often shifts from the insurer to the contractor. The contractor becomes the lender. The homeowner becomes trapped between the contractor and the carrier. Everyone grows frustrated. Projects slow down. Relationships deteriorate. Finger-pointing begins. The question isn't whether contractors deserve to be paid. The real question is why the system quietly evolved into one where contractors are expected to finance insurance companies for free. Maybe that's one reason estimates keep getting larger. Maybe contractors aren't padding estimates. Maybe they're pricing the cost of uncertainty into a system that refuses to recognize what uncertainty actually costs. General contractors aren't banks. They never agreed to become one. Perhaps it's time the industry stopped pretending they did.